Hello everyone, thanks for joining us this morning and welcome to this educational presentation of don't be afraid of this current market volatility. In fact, embrace it. I'm going to show you a great technique today that really is designed to embrace this volatility. Unfortunately, a lot of traders are scared off by this movement in the market, and because you can't blame traders. Every day you're barraged with news and different sightings of what the market did. For example, if we look at this, it just happened just a few weeks ago. We see the Market Watch reports that stocks finished their worst week in 2 years as investors fear the trade war. Okay, so just looking at that report would make you think that things are terrible and you should stay out of the markets. And then just about a week or two later, Wall Street shakes off the trade war fears with dramatic comeback. Dow closes up 230 points. Okay, so things are fine. It's okay to get back in the market. Don't worry about the volatility. That was on April 4th. Then 2 days later, the Dow dives 570 points as trade war anxiety haunts investors once again. Now, this was just a snapshot taken from the LA Times on April 6th, which was last Friday. Since that, we have already gone back up, come back down again, and gone back up. So there's still more volatility included in the markets. But I'm going to show you a great technique today that if you're willing to trade with volatility and embrace it, it can get you on that right track for consistency. So this promises to be a great presentation. Welcome once again. My name is Steven Primo, President and Founder of Specialist Trading. If you are new to my webinars, our only goal is simply to educate you. We're a little bit different from other presenters in the fact that even though we have courses and strategies and colleges and different types of ways in which to trade the markets, we're all about educating you so that once you get this education, you can decide for yourself. Now, I've been trading for 41 years, actually. I started my career on the floor of the Pacific Stock Exchange. I was on the floor for 16 years. 9 of those years, I was a specialist. That's where we get the name specialist trading. A specialist is just someone who made markets, who specialized in making markets, roughly about 50 or 60 markets. So I did that during the crash of '87 and the bull market that followed. So if you're thinking that we're going through a volatile market, I've traded through all different types of volatile markets. I've traded through straight up, straight down, sideways markets. Plus, I've traded any system, any strategy you can think of. I've traded it or used it in some capacity. So in my 41 years, I know what works in terms of consistency and I know what doesn't. So I'm here to shorten your learning curve so that you don't have to waste time and most especially money buying all these $10,000 programs or courses that are supposed to, make you rich in 1 year, and that usually you wind up throwing away after the first couple of weeks or so. So I know what works in terms of consistency and I know what doesn't. So that's what we do. We try to educate you so that ultimately you're in charge of your own trading. Now, I'm going to show you a great technique today that you can start applying right away. But please remember that before we do, we're required by law to show you this. So take a moment to view our disclaimer. I'm going to show you a lot of performance results using this technique. But once again, please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And please remember that all examples are strictly for educational purposes only. Now, as you're taking a brief moment to view our disclaimer, I would also like to invite you all to follow us on Twitter. Every day I post different information. I've been posting signals that some of our strategies have generated for educational purposes. I also post little bits of wisdom along the way. So lots of great free information. Feel free to follow us on a daily basis on Twitter. Now, as I stated in the beginning, we are first and foremost an educational company. Our only goal is to teach you. As you see here, it's not to force feed you signals. It's not to tell you what the perfect time frame is. And in fact, I must get emails on a daily basis asking, Steve, what's the perfect time frame to trade this market? Or what's the perfect market to trade? And I always tell them it's your choice. You're in charge. You should be in charge. But for some reason, we've been taught to take all our answers, all of our reasons and justification for trading from someone else. Now, the only thing that person should be doing is supplying you with information and education. But ultimately, you have to make your own trading decisions. If there's one thing I've learned in 41 years is that that is the only way one becomes a consistent trader. If you've been following some trading guru or going to some chat room or trade room or spent thousands and thousands of dollars on some master system or trading room or college, ask yourself, how's it working for you? Okay? I think the reason why most traders have difficulty is because you've taken yourself out of the game. So my goal is supply you with this education things that I've accumulated in my 41 years. So hopefully you can put yourself back in the game and be in charge and take control of your own trading destiny, okay? So my goal is to teach you, not to trade for you, but to teach you how to trade with a specialist edge. When I was struggling some 40 years ago, this is the same edge that was taught to me, and I really truly believe that this is what has sustained me now for 4 decades. Now, since this is an educational classroom, I love to take your questions, but please hold off till the very end. We have a good crowd here today, and we don't want to take all of your time answering questions. So it works a little bit better if we wait till the end. So if you happen to join us late, please wait till the end to ask, maybe write them down or try to remember what your question is, and I promise I'll go over it. The only question I will answer is this being recorded? Yes, it is. So if you have to leave early or if you can't see or hear the screen, oftentimes if you log off and log back on again, things will be corrected. But if they're not, don't worry. We will furnish you with a link to this recording, okay? So as I stated earlier, we have a good crowd here today. Please wait till the very end of today's class to ask any question. All right, so let's begin. Now, for this method I'm going to be sharing with you today that embraces volatility, there are 2 things that are required. First of all, you must listen to the market. Okay, you've heard me talk and really go over that many times in different presentations. And on top of listening to the market, you must apply structure. Okay, now let's take the first one, listening to the market. Why do we have to listen to the market? Okay, well, the reason why we listen to the market is in order to find the trend. See, that's the only reason we're listening to the market. The first thing we usually do is we go to a chat room or we turn on the TV or we go to a blog and listen to what they're saying. But we're not listening to the market. So we have to listen to the market to tell us what it's saying, because after all, that's what we're trading, right? So we only want to listen to that. We don't care what some guy who's been trading for 10 years thinks the market's going to do. We don't care about what the institutions are going to do. We don't care about what some guy on TV says. Because if those things work so great, then everyone should be a millionaire, right? But they don't. There's no consistency. So isn't it a little bit more logical just to focus on what you're trading and listen to that? All right, so now that you know that you should first listen to the market, well, how do you do that? All right. We listen to the market by listening to the Pet Dee. The Pet Dee is a tool that listens and translates what the market wants to do. It's the best tool I have ever traded with in my 4 decades that really translates what it wants to do. Now, it's not a predictive tool. It does not tell you how high or how low the market will go. It just tells you on a tick-by-tick basis if the market wants to go up or if the market wants to go down. If you're watching a 5-minute chart, the Pet Dee will tell you what it wants to do in a 5-minute time frame. If you're watching a monthly chart, it will tell you what it wants to do on that, because it easily translates onto any market and any time frame. You see, it's a color bar tool. As we look at this example here, we see that in hindsight, obviously the trend was going up here in Aetna. So obviously you want to buy it, right? So what happens when you buy it and then this happens? What if you had a tool that at least could give you an early detection that the trend was going to change? And after all, you don't want to get in here right before it goes down. You would have liked to have gone in somewhere here. Well, you simply add on the Pet Dee and you can see that the Pet Dee turned green, which tells you you're in the beginning of an uptrend. And the minute it turns red, it tells you the trend has changed. So this is a great tool to have in your favor, because once again, we're not relying on what the institutions or what some support and resistance is supposed to be telling you. We're relying on what the market is telling us. And the Pet Dee is simply translating what the market wants to tell us. So this is the best way I know of how to listen to the market. Okay, that's requirement number 1. Now we go to requirement number 2. Now that we know what the market wants to do, we have to apply some structure, right? In other words, I always tell my students, it's like you're in the woods and you want to take an inner tube out to the river, all right? You want to get from point A to point B. When you walk up to the river, you say, okay, well, I see the market is going in this direction. Right, so you know what it wants to do. It could be a very strong, strong river with a lot of rapids, or it could be a quiet type of smooth flowing stream. But now you know, you've listened to it, you've seen it, what it wants to do. Now you have to add a little structure. In other words, you have to add a little rowboat or an inner tube or some type of raft to be able to ride along that current. Okay, so this is the structure we need in order to trade. Now we add the structure in order to enter the trend, as I just said. That's in order to ride with the current at our back. So how do we do that? Well, There are a number of ways to do it, but this particular method relies on candlestick patterns, all right? Candlestick patterns are basically now trading 101. When I first started trading roughly about 41 years ago, no one had even heard of candlesticks. In fact, I had to learn how to trade candlesticks from someone from Japan who had transferred over to work at a Japanese bank in Los Angeles. And so because no one knew what they were, and I had read some things, and I wanted to learn what exactly was behind this candlestick pattern trade. So the technique I'm going to be sharing with you today can virtually be applied to any candlestick pattern, but there's a couple of things we need to know. We're only going to focus on one today, but we need to know, first of all, because most traders, myself included, when you're first taught about candlesticks, you're taught that they're a great reversal pattern. I was just talking to someone the other day that says, look at this. This is a great doji. This means that we're going to stop here. And I said, why does that mean that? Why do you think that means that? And it says, well, the market has been going straight down and there's a doji at the very bottom. So that means that's a reversal. Okay. And I said, listen, in my 41 years of trading, I have found no consistency in that because they work every once in a while. Every once in a while, you will see candlestick patterns, regardless of which one you're applying, that will pick a top or a bottom. They will pinpoint a reversal perfectly. But here is a way to find even more consistency. Candlestick patterns have a higher level of consistency if you trade them in sync with the trend. So this is a great secret that took me years to identify, but it really adds to your consistency because you will get a lot more setups and you will be riding that stream or that river with the current at your back as opposed to trying to swim upstream. So we're going to be trading candlestick patterns with this technique. We're going to be listening to the market with the Pet Dee. And as I said earlier, you can virtually apply this with any candlestick pattern, but we're going to mainly focus today on bullish and bearish engulfing patterns, okay? If you're not familiar with a bullish engulfing pattern or for any engulfing pattern, it's a two-bar pattern. Now, here's the way we're going to apply this method. We're only going to buy this two-bar pattern if bar number 2, that's the engulfing bar, is colored green. All right, because the Pet Dee is a color bar tool and it colors either red or green. So we don't care if every bar prior to that engulfing pattern was red. We don't even care if bar number 1 in that two-bar pattern is red. All that matters is that bar number 2 is green, and that's a nice buy setup. All right, here's what you're looking for. This is a generic example of a bullish engulfing pattern, okay? It's a two-bar pattern. Bar number 1 is usually down, bar number 2 is up, and bar number 2's open to close range engulfs bar number 1's open to close range. Now, all we want to see in order to use this as a bullish bias is that bar number 2 is colored green by the Pet Dee. So once you apply the Pet Dee, you see that the Pet Dee actually colored both of these bars green. So that's a valid buy setup, okay? So this has given us a ton of consistency that most likely, whatever we're trading, whatever time frame this is, whatever market it is, it makes no difference. Most likely it's going to go up. And this is how we ride this volatility, because you're going to see a lot of these patterns within these volatile markets, okay? Now, bearish engulfing patterns, they're the exact same thing, just to the opposite side of the coin. It's a two-bar pattern, but we're only going to sell, we're only going to use the bearish bias if the engulfing bar or bar number 2 is colored red. Remember, it does not matter if bar number 1 is green or red. In fact, it makes no difference. And it makes no difference if all the bars, 10 bars prior to this, are colored green or red. It makes absolutely no difference. Only thing that matters is that bar number 2 is colored red. That's the only thing that matters. So here is your generic view of a bearish engulfing pattern. As you can see, it's a two-bar pattern. Bar number 1 is usually up. It doesn't have to be. I know a lot of people say, well, I thought bar number 1 has to be up. It doesn't have to be. But I would say 3/4 of the time it is up. So you want to see bar number 2 down, though. Bar number 2 has to be down, and its open to close range has to totally engulf bar number 1's open to close range, regardless if it's up or down. All right, once you see that, well, you have a bearish engulfing pattern. Does that mean we're going to take action? No, we have to apply the Pet Dee because we have to listen to the market. So we have the structure, but what is the market telling us? Well, once you add the Pet Dee, you see that bar number 1 is green. That's okay. It makes no difference. But as long as bar number 2 is red, it is okay now to use that setup as a bearish bias. Now, does this have to be at the top of a market? Does it have to be at the bottom? It makes no difference where it is. It makes no difference that you're trying to find a reversal. All we're looking at is this pattern. And now you are in sync with the short-term trend because the Pet Dee is telling you it's translating that it wants to go down. And you've just added a good amount of consistency. I know we have a lot of people here today, and you may have joined us late, but if you're asking questions, please wait till the end to ask any questions, okay? I have to open up this question and answer box, and I'm not even going to open it up till the very end, so just hold off on any questions. All right, so when we combine these two techniques, we create what we call our candlestick combo. This is probably one of our best and most popular in terms of consistent ways in which to trade volatility of movement. We have a lot of students, when we first put together this package, what we did was this course was mainly designed for forex because that's where you get these really strong trends. But then later students told us, they said, Steve, I also trade this with E-mini futures on a 5-minute time frame. I also trade this with stocks on a weekly time frame, and it works just as well. So in the beginning, initial phase of our candlestick combo, it was basically for forex traders, but now we've seen that it works in any market, any time frame, in any direction. And it's specifically good for capturing these trendy and volatile markets. So let's show you some more examples so you can get it under your belt, some recent examples going back the last couple of months, even the last couple of days, okay? And then we'll stop and answer any questions that you may have. Okay, we see here in PGR, all right, this is coming in at the beginning of the year. Now the market is going up, right? Obviously. Someone looking at this would say, well, okay, Steve, we're in an uptrend, right? I don't really need to listen to anything. I can see for myself we're in an uptrend. Now, I took this course. I spent $10,000 on candlestick trading, and the basis for all candlestick trading is the reversal. So obviously, I'm looking for some type of bearish engulfing pattern, some type of doji, some type of, reversal pattern, because I assume that we're topping out, and I want the market to tell me that it's going to top out, okay? That's the way I was taught, 4 decades ago, and that's the way most people are taught. And every once in a while, you will get some nice, very nice setups that way. But once again, you will get better setups if you are in sync with the trend. Let me show you what I mean here. While you're waiting for a bearish engulfing pattern or whatever pattern you're looking for, a candlestick pattern, we see here that we have a bullish engulfing pattern. Now, most traders would say, well, no, I can't take that. That's only supposed to be at the bottom of a trend. So I'm going to pass on that. But what is the market telling us? Remember, we have to listen to the market. The market's telling us that, yes, we're in a full-fledged uptrend. In fact, we didn't have to wait till this point to find out that we were in an uptrend. The Pet Dee was telling us way back in advance that we were going higher. See how the color of the bars were already outlined green? This is already telling us that we're in an uptrend. There's no reason to wait. All right? So it's okay to take this as a bullish bias. And if you want to have some type of setup to enter using this, that's fine. Well, most people would say, well, Steve, I wasn't taught that way. Remember, there's no consistency in that. I take it from someone who's been applying it for 40 years. There's more consistency if you're in sync with the market or listening to the Pet Dee. As you can see here, had you taken that, well, you would have gained an extra 3 points as you went up. Now, one of the things I use this example strictly for was not to show you how many points we made, but to show you that this setup worked much better than this bearish engulfing pattern or this bearish engulfing pattern. Do you see how we had a bearish engulfing pattern here? It wasn't colored red, and the market kept going up higher. And then you have another one. This wasn't colored red, it was colored green, and we continued to go higher. So this is how the Pet Dee can really help you, and that it doesn't pay to use these candlesticks just in the traditional sense. Let's look at another example in letter K here. Now we have a downtrend, right? Easy to see that we've been going lower. What's the way we've been taught traditionally? Well, we want to look for a reversal, right? We want to buy low and sell high. So the candlesticks are designed to get us in at the bottom and out at the top, right? Well, sure, every once in a while, just the way slot machines are designed to pay off the big jackpot, but they're actually designed to keep you there long enough so that you give away all your money. And that's kind of the way it is when you're picking tops and bottoms. Every once in a while, you'll get a good winner, but over time, you really have nothing to show for it. Take it for someone who traded that way. I almost lost all my money my first year of trading on the floor using traditional wisdom, using the things that were supposed to work. Okay, so I was lucky enough to have some mentors that taught me the same things I'm teaching you. And they said, Steve, listen, it's better to be in sync with the trend than to try and fight the trend, to try and pick a top or a bottom. So even though the market's going lower here, we're going to be sellers. We're not going to concern ourselves with trying to pick a bottom. And what do we find here? We have a bearish engulfing pattern, okay? Now, most traders would say, well, you can't take that. You only take that at the top of a rally, at the top of an uptrend. There's no consistency in that. You'll have better consistency if you trade it in sync with the trend. Let's see what our translator says. The translator says, yeah, that's a high probability setup. Why? Because bar number 2 in the bullish engulfing pattern is colored red, telling you that the market's saying it most likely wants to go lower. So guess what? The market gapped down the very next day. You could have gotten short that day on the close, or sold, or purchased some puts, and 4 quick points in 3 days. Okay, nice little quick trade. Look at some more here. This is in about a month or two ago in Fossil. Obviously, this looks like it's going nowhere. We're kind of going sideways to even lower, but we have a bullish engulfing pattern here. Okay, let's see if the Pet Dee is confirming, if the Pet Dee is telling us it's okay to buy. So we add a little Pet Dee in terms of it's being a translator, and guess what? It's saying no. It's a bullish engulfing pattern, but bar number 2 is outlined red. So that means it's saying there's not a high probability that this is going to work out. So I wouldn't take that. All right, so we see what happens here in the next week, and the market went up, but for all intents and purposes, it really did nothing, kind of went sideways. But what do we have here? We have another bullish engulfing pattern, and guess what? This one is outlined green. So even though we're not buying at the lower portion here, at least we have confirmation. At least we have a little more confidence that it's okay to take this setup. So had you gone long Fossil then by purchasing the stock roughly around $9, well, guess what? In one day, it gapped up 9 points, or 100%. You could have had a 100% gain in one day. All right. Obviously, some news came out. Obviously, something was indicated or announced that made this stock gap up like that. Now, did we know? Do we follow fundamental analysis? No, we don't. Now, we don't discourage it, but there's no reason. It's not required at all. Why? Because the market tells you everything you need to know. So why overcomplicate your trading? I didn't have to read the fundamental reports or the earnings or whatever was going on in the company to know to get long that day. One day in advance, the market was telling me it wanted to go higher, and the Pet Dee, our market translator, confirmed it. All right, let's look at eBay, okay? This is March 12th. This was just this last week, actually, or I should say last month. Now, we're kind of going sideways, but we have a bearish engulfing pattern. Let's see what our translator says. Well, the translator says it's okay. It's okay to sell that because bar number 2, the engulfing bar, is colored red. That's all you need to know. It wouldn't matter if every bar prior to that was colored red or green. It absolutely makes no difference. The only thing we're concerned about is the engulfing bar, or bar number 2 in the 2-bar engulfing pattern, is colored red, because that's confirming coming from the market. Not coming from some guy on TV or somebody in a chat room, but it's coming from the market. That's the only thing we listen to. So the market is giving us this great clue that it wants to go lower. You could have, once again, purchased puts or sold the stock, and the stock continued down coming into the middle of April, down 5 points. And the beauty of these techniques is if you get a strong enough trend and you miss the first setup, well, oftentimes you'll get more setups along the way. As we see here, here's another bearish engulfing pattern that was confirmed, and the stock went lower. All right, let's look at a great example here of how the Pet Dee can keep you out of some bad trades at times. Not guaranteed, because every once in a while you will have losses. That's perfectly okay, because nothing works 100% of the time. We're just trying to increase our odds for success. That's all we're trying to do. We're trying to filter out as many losses as possible, because we know we're going to get losses from time to time. It's okay. For example, here we see in KLAC in February, we were coming lower, and here's a bullish engulfing pattern. All right. The way we're taught is that, well, we want to buy this because that's the bottom of the downtrend. But look what happened. It went lower. All right. Now this one is going higher, and it also generated a bullish engulfing pattern. Well, so which one should I have taken? All right. The first one obviously did not work, and I don't think I would have stayed in long enough to get out taking all those losses. Now here's another example of how the Pet Dee can help you, because all you have to do is add the translator, the Pet Dee. And remember, if we get a bullish engulfing pattern, bar number 2 has to be colored green. And what color is it? The outline is red. So the Pet Dee was telling you, do not take this trade, because it's not a high probability setup. And had you not taken it, you wouldn't have lost anything. Now you have another setup, but this time bar number 2 is colored green. So you have a bullish engulfing that has a bullish bias, and the Pet Dee is confirming it because your translator, the Pet Dee, is telling you that the market wants to go higher. And as you can see, 13 points, and another signal was generated just a couple of weeks later. See how simple this is? There's no reason to figure out earnings. There's no reason to look at support and resistance. There's no reason to figure out what the volume is. There's absolutely no reason to go to blogs or a trading room or a chat room. There's no reason to listen to the pundits on TV. Now, if you want to, you can, but there's no reason to, because everything you see here was generated just by listening and applying a little structure to the markets. That's it. Why? Because it's our philosophy that the market tells you everything you need to know. You just have to learn how to listen to it. And once you listen to it, you see how simple it is. It's extremely simple to follow. Let's look at XLNX. All right, now this is coming into March once again, just last month. We've been going higher. We're in a short-term uptrend, and now we have a bullish engulfing pattern. All right, we've all been taught that that's not where you take a bullish engulfing pattern. You look at the very bottom of a downtrend for a bullish engulfing pattern. But there's no consistency in that, and plus you'll get a lot more trades if you trade in sync with the trend, because these bullish engulfing patterns are being generated all the way up, and the bearish engulfing patterns usually are generated all the way down. So you get a lot more setups. All right, let's see if this one was confirmed by our translator, the Pet Dee. Yes, it was. It was colored green, and you had a quick 6 points to the upside. Now here's once again what we mean by consistency. Consistency means 2 steps forward, 1 step back. Not every time will not generate a winner, or maybe sometimes you may lose some setups. For example, this is a perfect bearish engulfing pattern, but according to our translator, the Pet Dee, the market wants to go higher, so you would not have used that as a short, and it actually went lower. That's okay. The market hadn't made up its mind yet and still thought it was going higher. So you would not have done anything. Now, where most traders who are inexperienced or immature in trading would say, well, gosh, I missed that top. That's okay. You just want high probability setups. It's not about buying at the bottom or selling at the top. It's about picking setups that have high levels of consistency. So even if you had missed this setup to go short here, guess what? 2 weeks later, there is a confirmed setup to go short. You have a bearish engulfing pattern, and bar number 2 is colored red, and you made 6 points. So that's 12 points in roughly about a month. It's not bad. It's very consistent, and there's not a lot of pressure because all you have to do is listen to the market and then apply some structure. How about EIX? Okay, now here's another example of consistency. We look here, this was going back some time ago in November. We see here that we were first met with a bullish engulfing pattern, and we went up a little bit, but then really didn't do much until we were met with a bearish engulfing pattern. Now, looking back in hindsight, the first signal didn't work out too well. How would we have known that the second one was going to work out? Let's add our translator, the Pet Dee. Well, the first one was confirmed. Bar number 2 was outlined green. And we did go up a little bit, but then we came back, pulled back, and really didn't do anything. So had we stopped and reversed, we most likely would have broken even on this trade. Not made anything, okay? Let's say that we didn't get out somewhere here, that we held on, and now it's time to reverse because now we're met with a bearish engulfing pattern. Okay, so we broke even on the first trade. We decided to take the second one. Why? Because it's confirmed. Bar number 2 in this bearish engulfing pattern is colored red. That's all we need to know. We don't need to know the earnings. We don't need to know some announcements coming out. We don't need to know what's going on economically or throughout the world with news. All we need to know is that the market is saying, I want to go lower. So we jump on board with adding some structure in the form of a bearish engulfing pattern and 19 points to the downside. Okay, did we know it was going to go down that much? No. Are we saying that you would have been guaranteed 19 points? No, you could have gotten out wherever you wanted to. Remember I said at the very beginning of the presentation, you are in charge of your own trading destiny. Some of our traders could have taken this setup and said, I'm getting out with a point profit. That's fine. Others could have said, I'm getting out with 5 or 10 points profit. Others could have said, I'm going for 20 points. That's where it's up to you. You are in charge, not me. Now, our job at Specialist Trading and Pro Trader Strategies is to provide all of our students around the world with structure in the form of entry points, exit points, stop placement. So we have different exit points you could have taken advantage of. But you decide which one, not me. I'm not trading for you. I'm giving you the different options and variables in which to cash in if you like, but that's up to you. Where you decide has to come from you. All right, let's look at MU, all right? Someone looking at this will say, okay, Steve, yeah, this has been going up. All the tech stocks been going up like this, and semiconductors, and I'm looking for a bearish engulfing. I'm looking for something to tell me that this is going to stop going up, all right? That's the way traditional wisdom tells you to trade. But as we see here, we have a bullish engulfing. In fact, we had two. We had one right here and one right here. Now, most traders would have said, well, you can't take those in an uptrend. You're supposed to take those at the very top of or very bottom of a downtrend, excuse me, and vice versa for a bearish engulfing pattern. But remember, we don't trade that way anymore. We want to be in sync with the trend. We want the current at our back, all right? We don't want to swim upstream. There's no consistency in that. Trust me, take it from someone who's been here 41 years. I would not be still trading if I tried to swim upstream all the time. If I tried to trade tops and bottoms, it just wouldn't work for me. I would have, been busted a long time ago. But by the very fact that I changed my way of thinking and wanted to trade in sync with the trend has sustained me now for 4 decades. So this is the consistency we're trying to instill in you and all our students around the world. Trade in sync with the trend, and you'll have that longevity. So we're in sync with the trend. We have 2 bullish engulfing patterns. If we want to see what our translator says, well, our translator has been saying, yes, we're going up. This one was confirmed, and this one was. So you could have taken both of those for a total of 18 points had you taken the very first one. Once again, no reason to read any earnings or fundamentally or seeing what the sector is doing because the market's telling you what it wants to do right there. That's all you need to know. Let's look at this example in TAP. All right, this was just a few weeks ago, and we see here that this follows more of traditional wisdom because we've had a short-term uptrend. We have a bearish engulfing pattern right here. Let's see what our translator is telling us. Well, it's confirming it. Now, if you notice here, we had another bearish engulfing pattern here, but it was not confirmed. Now, had you sold, you would have had to sit through 2 or maybe even 3 days here as we topped up here of the market going higher, and that may have frightened you and you may have stopped yourself out. Whereas if you waited for the confirmation with the bar number 2 being colored red, you could have entered here and had that nice 8 points to the downside. And you wouldn't have had to sit through a couple of sleepless nights wondering if this is going to be a losing trade or not, because it went down the minute you would have gotten in. Now let's look at another example here. This is in UPS. Once again, this is showing you consistency, the 2-step forward, 1 step back. Obviously, we're in an uptrend here. We had a total of 3 bullish engulfing patterns generated. Were they confirmed by our translator, the Pet Dee? Yes, they were. Had you taken the very first one, that's 16 points in your favor that you potentially could have captured. This one worked, this one was confirmed, and the market pulled back, and now we had another one. But guess what? You would have most likely either exited because this one didn't really go according to plan because it was met the very next day with a bearish engulfing pattern. So if you wanted to, you could have exited with a loss, or you could have stopped in reverse. You could stop yourself out in reverse. And that probably would have been the best thing to do because look what happened, 27 points. In fact, 2 days later, there was a large gap down. So do you see how the Pet Dee was telling us in advance that it wanted to go lower, and look how the market all of a sudden shifted. And obviously some news or some event that caused this to gap down like that. We had no idea. The CEO of the company didn't call me up and tell me to have all my students short the stock, UPS, because it's going lower. The market told us. No one told us except the market that it wanted to go lower. Please don't overcomplicate your trading. There's absolutely no reason to do that by looking at earnings reports or by listening to all these blogs or going to all these chat rooms. You can if you want to. We're not stopping you, but there's no reason to do that. If you have a great way to listen to the markets and some structure in which to jump into the market, that's all you need to do. There's no reason to overcomplicate your trading. Now, lastly here, we're looking at LRCX. We see we have a bearish engulfing pattern. Okay, bar number 2 engulfs the range of bar number 1. Is the Pet Dee telling us it's okay to take? Well, yes, it is. So it's confirmed. Bar number 2 is colored red, and we go down 40 points. All right, so you would have had 40 points to potentially work with. We're not saying you would have captured 40 points. Maybe you only wanted to take a 2-point profit. That's fine. It's entirely up to you. Once the trend changed, the bars change color, we start to go up a little higher, and now we have a bullish engulfing pattern. So someone would say, I can't do that. We're going higher. I'm supposed to be looking for a top. No. Remember, you want to be in sync with the trend. What is bar number 2's color? The outline is green. So the trend is up. The market is telling you it wants to go higher. It's a high probability setup. Had you taken that setup, another 40 points to the upside. Now realize this is expensive, $100, $150 stock. You could have purchased calls and puts prior to that, and you would have had some very nice setups. So as we close here, ask yourself, do you think this method could have helped your trading this past year? Now we've been very volatile this past month. There are a lot of great examples. I'm going to share with you an example that just happened this past week in a few moments of how you could have taken advantage of this. All right? It's really not difficult. It's really easy, but you have to have the tools and the structure in order to trade with this method. So ask yourself, we're going into the middle portion of April, the first quarter here underway. How is your trading doing this year? All right? I know you had all these hopes and dreams in January. Are you anywhere near those hopes and dreams? Well, in a couple of months, we're going to be halfway through the year. Wouldn't you like to be trading something that has shown high levels of consistency that someone has been trading for 4 decades now? Well, remember, points to remember, especially with this method now. It is not a complete strategy. All I shared with you today is a high probability setup. The setup had 2 requirements. We're listening to the market with the Pet Dee, and then we're adding some structure. Now the structure could virtually be any candlestick, but in this case we're looking at bullish and bearish engulfing patterns just to keep it simple, all right? But all we did was pinpoint that high probability setup. We didn't tell you where to enter. We didn't share with you any advanced entry signals. Would you have entered on the close, on the opening of the next day? Would you have placed a limit? We also didn't talk about protection. Where are you going to place your stop? Would you place it just below where you entered? Would you give yourself a dollar stop? How would you protect yourself? We didn't talk about advanced exits. We show with you some examples that generated profits of roughly 40 points. Would you have taken all 40 points? Where would you have gotten out? All right. We have a number of stop and exit points for our members to apply. But remember, we didn't talk about that today. All we shared with you was sharing with you a high probability point for a bias to the upside and the downside. And lastly, we didn't talk about money management. Would you bet the farm once you saw that the Pet Dee confirmed a setup, or would you just bet a small amount? We didn't talk about money management and position sizing. Extremely important things to take advantage of. These are all important pieces of the puzzle that make up the full structure, the full plan in order to trade this. So here's what we're going to be offering you today, and we're giving you a great, great discount. We're going to offer you our Candlestick Combo special. This is strategy number 5 along with the Pet Dee tool, okay? You're going to get instant course access. You're going to see and be available to see all these setups as they're occurring right now on a daily basis, okay? This comes with detailed instruction through an online course, 20 videos taught by yours truly. And in those videos in the online courses, we give you all the different entry points, all the different exit points, and all the different stop placements, all right? We also provide you with educational signal alerts. Remember, you saw those up and down arrows, green and red arrows? Those are strictly provided for educational purposes because we want you to be able to spot a setup and to confirm it with the translator, the Pet Dee, and then we use the up and down arrows just to see if you're in line. In other words, we check your work to see if you properly identified a signal or not, okay? Now remember, you're getting the Pet Dee with this, which also includes 4 different and separate Pet Dee techniques. Lastly, you're getting mentoring correspondence with yours truly. You'll get access to my personal email where you can contact me anytime you want with a question, and I'll get back to you as soon as possible to answer any questions that you may have. Now, this is a great, great offer here. This is our Candlestick Combo, one of our most consistent and most popular methods in which to trade, especially volatile markets. This is usually goes for roughly about $3,000 to $4,000. We're going to discount it today for a one-time fee of $14.95 and only $97 per month. Okay, this is for a limited time only, and we're also going to offer you payment plans. Now, if you'd like to have a one-time fee, you can also purchase the course without the lease for $29.95. Now, this is a great, great offer right here, right off the bat with a combo. But we're not going to stop there. We're also going to include our PTS Primo charts. Every example you saw today, all the displays of current charts and everything with the up and down arrows with the Pet Dee was all formulated and generated from our new trading platform. That's the PTS Primo charting platform. Now we're going to throw in 6 months. Now 6 months would usually cost you close to $600. Well, guess what? We're not going to charge you $600. We're not going to charge you anything. We're going to give you 6 months free of our educational portal. This is the platform we know that you've been searching for to teach you how to listen to the markets and to teach you how to apply the structure. Let me show you what's included in this 6 months free. Now, obviously, you're going to be getting strategy number 5, which is just one click away. If you look here, I know it's a little bit difficult to see on the smaller section, but this green strategy tab here is where all our strategies are. You would just simply click on strategy number 5 and the up and down arrows would appear. Then you'd click on the Pet Dee and you'd see the colors change. Everything is pre-canned. It's right there, one click away. So you're going to have that plus the Pet Dee. We're also going to throw in our proprietary buy-sell line, which tells you which side of the market to be on for the overall trend. We're also going to throw in steps. These are proprietary techniques I learned on the trading floor for entry. They're great entry tools that you can add to any strategy, any method that will increase your odds for consistency with entry points. Now we have over 80 technical indicators included, so if you like to use other indicators to add to your consistency, you can. We've also included Bloomberg TV. This is live TV. We have a media page, so if you really feel you must listen and get involved with fundamental news, that's fine. It's not required, but that's okay. So you can be watching live reports coming from Bloomberg about earnings reports, fundamental analysis, news, and it's right there next to your chart, okay? Lastly, we have personalized tech support. Anytime you have a problem, can't load a page, or you're not understanding exactly how the platform works, we have some great tutorials. Plus, we have a great tech support that will contact you and usually resolve the issues in just a matter of moments. This is all included free. This is in the 6 months that you're getting with the platform. One more thing I didn't mention, as a bonus, we're throwing in our scanner. This is our scanner, our platform scanner. It's included. This is what you do. This is how simple it is. Once you click on strategy 5, you can click on the indicator that is included in the strategy, which we can't go over now because it's part of the strategy. We can include on the settings. Click on here for the arrows that will tell you the buy and sell setups. But here we want to click on scan, because once you do that, you'll see a scanning page all of a sudden be generated, and it will load a list of stocks or currencies or futures that you're interested in. All right? And then all you have to do is simply click on strategy 5 and Pet Dee, click on scan, and a list of stocks will appear that have been generated to meet the candlestick combo requirements. It's that simple. And this process takes less than a couple of minutes on a nightly basis, okay? Now let me show you what you could have scanned for just this past couple of weeks. On the 4th, if you had scanned that night, you would have seen that there was a buy signal in once, or I should say ONCE, all right? Now looking at this stock, you'd say, well, I don't understand why there's a buy signal here. The stock is going sideways. There's absolutely no movement to this. There's no earnings coming out. There's no interest in the stock. Why would I be interested in this? Well, you have a bullish engulfing pattern, so there is a buy signal that's been generated. And if we apply the Pet Dee, all you have to do is click on the Pet Dee right here, and bar number 2 is colored green. So guess what? That's your candlestick combo, okay? That's one of the setups right there we just talked about. That's a setup that the market is telling you it wants to go higher, and you just added some structure. Now, you don't have to take this trade. Remember, it's up to you. But this is a high probability setup, and had you taken that on the 4th, well, guess what? The stock gained 11 points in the next 4 days, okay? This is something you could have scanned for, and taken our course, you would have seen. And this just happened roughly in this last week. So this is what I'm trying to share with you. This is how simple trading can be. All you would do is go and scan. You could click on strategy number 5 right here in the upper green strategy tab, and that would generate the up and down arrows. Then you would simply click on Pet Dee, and it would automatically color the bars. And you could see for yourself if this was a candlestick combination, high probability setup. Trust me, a year from today, you will have wished you became a member of this course, okay? This is generating signals in sideways markets. It's generating signals in volatile markets, the way you see. So embrace it. And the best way I know of embracing this volatility is with the Candlestick Combo, because the way these setups are generated, they seem to embrace the volatility themselves. So that's how you can get these really nice high probability setups. Remember, we're offering you a great discount today. This course usually runs anywhere from $4,000 to $5,000. If you want to purchase both courses without the lease, we've discounted it down to $29.95. But if you want to take an even greater discount with the lease, what you can do is have a one-time payment of $14.95 plus $97 per month, and that comes with the 6 months PTS Primo charts free. So everything is right there for you. It's a great, great offer. It's a great way to get your trading back on track. So let me show you how to take advantage of this great offer, because this is only for a limited time only before we go back into the $3,000 and $4,000 range of this product. Contact my sister site, Pro Trader Strategies. I developed the platform with them. You can either email them at trading@protraderstrategies.com, more questions, or I would suggest and recommend that you call them directly at area code 310-598-6677. They can answer more questions that have to do with tech support or concerning the actual platform, and they can help you also with a payment plan if you'd like as well. Now, that link you see at the very bottom is the link that would take you if you're ready to sign up and become a student of mine. That's the link that would take you there. But that's not a live link. You'd have to copy and paste that onto your browser. But there is a live link in the chat box. If you look in the far right-hand corner of the Go to Webinar column, you'll see in the chat box there is a live link that's been posted. You click that on and it will automatically take you to the sign-up page, okay? Remember, you'll be up and running most likely today. You'll be getting all the rules and all the information, the Pet Dee, as well as the platform set up on your computer through our tech support, as well as strategy number 5. And you can be up and running and a student of mine in the next 24 hours. So I'm going to leave this information up here as I open up the question and answer box. And I want to thank you all for holding off on asking any questions. And I'll bring them up right now. Let's see. Nick asks, what is tick by tick? Well, Nick, a tick is simply an increment in a movement in a stock or a future, and in currency pairs, it's a pip. It's just an increment of movement. So in other words, let's say the stock is trading at 50. And if the next sale of the stock is 50.01, well, it went up 1 tick. If the next sale was 50.05, well, then it went up 5 ticks, okay? That's simply what a tick is. So what the Pet Dee is doing is it's translating on a tick-by-tick basis what the market wants to do through its proprietary formula, okay? Let's see. Nick asks, if we're working on other software such as Thinkorswim, can we apply Pet Dee to their charts as well? Good question, Nick. Well, the way Thinkorswim is structured, they won't allow us, or they won't allow not just us, but anyone to use their other indicators or strategies. They want just their stuff in-house. But what they have told us and other educators, they said, listen, we will let you use our data feed from Thinkorswim, and you can apply it to a platform, your platform or any other platform, and most likely NinjaTrader. And on that platform, you can apply the Pet Dee as well as strategy number 5. Now, the beauty of our PTS Primo charting platform is you don't have to worry about that. We're not connected with Thinkorswim or anyone else. You can get our own data, which is going to be included with the 6 months free, and everything is right there. So it's a great way not to have to worry about it. You can be running Thinkorswim on one window and then toggle back over to the platform to see what the signals are on the other. So it's a great way not to confuse things and to keep things separate, okay? Question, engulfing candles should cover the previous candle, including the shadows or only the body? Well, that's a good question. For some reason, people think that engulfing means that you engulf the entire open to close range. In other words, from the top of the wick to the bottom of the wick. But really, that's the traditional way is you only want to engulf bar number 1's open to close range on the body, okay, from open to close. That's it. So we're only concerned with engulfing the open to close body. That's all we're, and it doesn't matter if that's up or down. We just want to engulf the body, okay? Let's see. Are you using Ninja software? No, we're using the PTS Primo charting platform. That's why we're talking about the platform. That's why it's so good, because it's so simple. Do you recommend to put some stops? Well, yes, it's not recommended. It's required. We do have stops in all of our strategies, but please remember that What you saw today was just a setup sharing with you a high probability area bias for upwards movement or downwards movement. We didn't include all the information, but stops, entries, exits, money management, that is all included in the Candlestick Combo course, okay? We couldn't include everything because it wouldn't be fair to the people who have already purchased the course, and to be quite frankly, they purchased the course at a higher price. We're giving you an even better discount today, okay? What is the significance of a hollow candlestick? Good question, Robert. Well, the reason why, there's two reasons. The first reason is that that's the way traditionally I was taught, and that is traditionally the way in which candlesticks were generated. You see, going back 4 decades ago, when I first learned how to trade candlesticks, I was actually taught on a piece of parchment paper, and that parchment paper was white. So when you had an up day, all you did was create an open or a hollow candlestick, and it just had a black outline. When you had a down day, you created a black color of the body. So it was easy to distinguish. That's why you had a white background, and a hollow would mean it was up, and a dark would mean it's down. It was just that simple. For some reason, traders in the West, when they were introduced to candlesticks 4 decades ago, couldn't grasp this concept. They thought it was too difficult. So these platforms decided, well, the West likes colors. So if we have a green candlestick, that'll mean that the bar closed up that day, and a red one will mean it closed down, okay? Now that is no way a traditional sense of the way candlesticks were taught. It was just Westernized to make it easy for the Westerners to understand and grasp the concept. So we're using the traditional way candlesticks were, just by having an up day is a hollow day and a dark body is a down day. Now the second reason why we use this is because it makes it easiest for us to see and apply the Pet Dee. If we have an up day, we still have a hollow candlestick, but the outline is colored green. If we have a down day, we still have a darker candlestick, but now it's colored a darker green. So it's a lot easier for us to show you. And trust me, students have told us, because they've been trained to use it this way, this kind of edited and altered way for the West. But once they get used to it, they see that it's a lot even easier to see with the Pet Dee, okay? So I hope that answers your question. I'm going to ask, what trading platform is used? Well, the educational platform is, the PTS Primo charts, all right? You can use any trading platform after that then. So in other words, if you want to enter your orders through TradeStation, through Metastock, through Thinkorswim, through NinjaTrader, through MT4, you can do that as well, okay? Mandala asks, sir, most of the time on Mondays, the market becomes unstable. Do you think your technique could have helped to win trades? Well, remember, these are not statistics. So we don't have statistics because everyone trades differently. Remember I said we offer different entry points and different exit points. So 2 traders could take the same setup and come up with entirely different results. In fact, one trader could have a winning trade where the other one could have a losing trade based off the same setup. So, and someone would say, well, how can that be? Well, one trader decided to enter at a certain spot. Another one decided to use the other entry that we give them. Another trader could say, well, I decided to have a really tight stop in case he may have gotten stopped out, where the other one gave themselves a wider stop. That meant they stayed in the trade and made money. So it's all up to you. So there's no way to say that it can be guaranteed that you'll make money on Mondays. It's how you decide to trade. The good news is that in our course, we give you all these different variables, and then you can decide for yourself what feels the most comfortable for you. Because it's our philosophy that no 2 traders should ever trade alike. In fact, in my opinion, that's a recipe for disaster. If you look at it, our entire industry of teaching and educating traders is based off of mimicking how some master trader trades, or mimicking some master system or some master strategy. And all you have to do is enter the orders here, and everyone places their stops at the exact same place, and everyone exits at the exact same place, and you'll generate so many profits per year. That's the way the entire industry is built. And if that worked, then why is it estimated that 80 to 85% of all traders fail? It's obvious because that doesn't work. You shouldn't be doing the same thing. You should be trading according to your own means, according to your own needs and preferences. So if you like very small risk, then that's the way you should be trading. If you like a large risk and you want to go for as much bang for your buck in terms of gains, then that's the way you should be trading. So no two traders should ever trade alike. That's why we can't say that what works on Mondays for some will not work for others. It's entirely up to you. But the good news is we supply you with the education and the information so that you can be in charge of your trading, okay? Hi, DT says, the PGR example you showed was not a bullish engulfing pattern. What was the example why was the example used? You know what, why don't you email me later on with that, DT, because I'm not sure. I don't want to backpedal. I'm not sure how far back that example is, okay? Nick's asking, are you giving a class on entry and stops as well? Well, remember, Nick, once you become a member of our courses, of our strategy courses, entries and stops are included in those courses. So we don't just, give you the setup, what we told you today. We give you everything in that. So that's where you get that information. In other words, look, for example, that today you walked into a restaurant and someone gave you a free appetizer, okay? And then you ask, well, are you going to be serving us a full meal and a dessert and beverages? Well, yes, but that's in the full entire course of the meal. Now, for that, you have to become a member of. You have to pay for the actual meal. It's the same way with this. I gave you an appetizer today, showing you these high probability setups. Now, the full course, the full entree, the dessert, the beverage comes in the course. Those are all the stops. Those are all the entry points and exit points, okay, as well as money management. Great questions. You all sound like you're experienced traders, but you all sound like you've had trouble with this volatility in the past. If you'd like some more help with your volatility trading, and even with not volatility trading, we have the information and the tools that can really help you get back on course, okay, on track. So if you're interested, please, as you see right here, contact Pro Trader Strategies. I developed and designed the platform with them so they can answer any of your questions. There's a lot of great trading consultants waiting to answer the phone and answer any of your questions, and they can help you with that, okay? So as we close here, we're just about out of time. Remember, contact them with any questions concerning the platform. And once you become a student of mine, then you can email me with questions regarding the actual trading and the execution of the strategy and the methods, okay? As we close here, remember, this is a great offer. I really feel it can get your trading back on track. And remember, if you've had trouble with this volatility, if you're having trouble currently, don't worry. We have the tools and the means to help you. So thank you so much for attending today. As you take one last look at our disclaimer, I hope we helped you, but most importantly, I look forward to you all becoming students of mine in the Candlestick Combo course. Thank you so much. I'll see you next time. Bye-bye.